All right, everyone. Happy Friday. It's been a bit of a long day for me, so I'm a little tired. So if I don't sound like my usual chipper and passionate self, we can chalk it up to fatigue. This has been, I think, an instructive month. I really think we've got to zoom in here and take a look at recent trading to get an idea of what's going to be coming up for the next week. Now, over the last several weeks, I've been talking about the importance of planning and the importance of being aware of what's going on in the market. Now, let's take a look at these four bars. You've got to notice, first of all, that the extremes were never held. Okay, so the market is trading up, and it can't hold it, trades down, it can't hold that, trades back up, it's not holding that, trades back down, up, down. So you have this real choppy action that is very, very typical of a congestion or a consolidation. Now what we see is that the market pushed to a new low here and now has pushed up. Now I know we're not quite done with the month, but we're about halfway through the month at this point, and you can see that the market is pushing up towards the high. Now, in prior months, you can see that the market pushed up to a high, pushed up to a little bit higher high, but then managed to close down. Then look at the next 2 months. The next 2 months really flattened out, especially to the upside. So for the first 2 months here, let me go ahead and put the circle back on. For these 4 months, try one more time. There we go. For the first 2 months, you can see the market was attempting to push up. In the next 2 months, can you see how the push up was much more muted? You can see that this resistance line here, which is drawn, by the way, on the daily bars, this resistance line was held. Okay, and then you can see how this resistance zone started to come into play. So you can see that in these 2 months especially, the market just ran smack dab into resistance. And this overhead resistance over here has been strong. Now we've got to look at that at this point, that the market has now broken through that resistance. Now again, it's not to say that the market has to continue to the upside, but we've got to acknowledge that, let me clear some of these lines, that the market established a resistance area here, the resistance area held here, and now the market is once again back into the resistance area. Now you've got to realize that all of this is playing out real time. As we're watching the market move, we can see the market overcome some of these resistance areas. But from a planning perspective, what we have to realize is if this market clears overhead resistance, more than likely you're going to see a big move up. Why? Well, first of all, you're going to have individuals that are trying to hold this market down. You probably have people with options here at $2 even. $2 is a round number. Psychologically, round numbers tend to be where traders congregate their orders. And so if the market does manage to push above $2, my bet is that you're going to see a rush up a bit higher, maybe even to $2.02, possibly even to $2.03. But a 200 pip move is not unreasonable, especially for the British pound market. In fact, it could clear 200 pips literally in one day. So we've got that going on. If we go down to the weekly, you can see that for the first time in a long time, the market has closed on its high and almost exactly at its high. So if you go back here and you look, let's just we'll count the bars. This is an exercise that's made really easy by this particular software package. Whoops. So we have 19 total bars here. Okay. So of these 19 weeks, let's go ahead and count how many bars closed at or near the high. We've got 1, there's 2,